Hey guys, it's Eric Green, Tax Rep Network. Can you save thousands or even tens of thousands of dollars with an S Corp? Absolutely. Okay. How though? How? And by the way, how do you do this properly? What if the government shows up? What if I get audited? Relax. I'm going to walk you through how to do this right now. The key thing about an S Corp, if you're just to compare it, if you are a self-employed individual, you're a freelancer, a brand new entrepreneur, business owner, you have a side hustle going, whatever. When you become self-employed, you will pay both halves of FICA, the Social Security and Medicare. When you're an employee, they withhold FICA from you and your employer matches. They're withholding 7.65% from you, and the employer matches 7.65%. It's 15.3% on the first $168,400, I think, in 2025. After that, it's 2.9%. It drops to 1.45% each. So when you're self-employed and you start your business and you have your federal income tax, if you're in Connecticut like me, you got a state income tax, and then all of a sudden there's this SE tax, self-employed tax. And you're like, whoa, really? If you made $150,000, your federal income tax, and I'm assuming you're a single person taking a standard deduction, all right? It's just for the accountants who are going to, question my numbers. You're going to have income tax around 24,000. You're then going to have self-employment tax around 22,000. All of a sudden, you get hit with a bill for 46, $47,000. This is why people get into trouble. It's what I do. So, if you are a single member LLC or a multi-member LLC, but being taxed as a partnership, it's called a disregarded entity. You pay self-employment tax on all of it. If you become an S corporation, and this is for tax purposes, you can have your LLC treated as an S corp. It's a simple election with the IRS. You don't need to do anything legal at the state to change anything. Um, Basically, if you become an S corp, the income flows through, not subject to self-employment, because an S corp, by definition, cannot be self-employed. It's a thing, it's a separate entity. Well, the IRS, the courts, the statute, everything basically says, wait a minute. If you are a shareholder of an S corp for tax purposes, and you are providing services to that S corp, you need to take reasonable compensation. Well, what the hell's that? And by the way, there are more urban myths about this. I'm going to squash all of it for you right now. There's no minimum percentage. Make sure you take 12,000, make sure you take 24,000, make sure you take $1 more than your other employee. I've heard all the nonsense in the world. You are supposed to, and this is what the cases say, right? Watson, McAllery, there are major cases in the last 10 years, 15 years that have all come down on this. And they all say the same thing. You are required to have written documentation that supports the reasonable compensation number that you're going to take. So let's get back to I'm coming up with these numbers because I just had a client, landscaper here in New Haven, Connecticut. We ran him through RC reports. I'm wearing the shirt. Reasonable compensation. RC, reasonable comp. RCreports.com. I can get you a discount if you're interested in this, but so we ran him through. Remember, he made 150,000 last year in 2024. His reasonable comp came up at $57,000. What that means is he would convert to an S corp. So given how late it is in the year, it will be for 2026, starting 2026. He'll have wages, again, assuming he does the 150,000 again, he'll have wages of around 57,000. That's what, and we have the written RC report comp, to support that. The other 92,000 is going to come out not subject to self-employment tax. Right? You're talking about saving $14,000 a year, year after year after year. Now, what I'm suggesting, he's going to pay about $2,500 because instead of a Schedule C, he'll now have a separate S Corp return. He's got to run the report every year. That'll be $400 or whatever. So let's say 12,000 is left over. If he puts that into his own profit sharing plan and the stock market returns on average 8%, that's the historical average, I believe. In 10 years, he's looking at $200,000 that he would have paid in self-employment tax that is now going to be in his own profit sharing plan. And I don't know about you, I hope for the best. I don't know if Social Security is going to be around, and I don't want to bank my retirement on that. So, can you save a ton of money with an S Corp? Absolutely. It just needs to be done properly. You need to have the written documentation to support it. Easiest, cheapest way, RC reports. I don't even know if they even have a competitor, but to hire someone privately to do this analysis, you're looking at $5,000 to $10,000. You just pay the $400, whatever it is, and just get the report done. Based on that, with that, you do it every December to set your wages for the next year, you can save a ton of money. So to wrap this up, yes, S Corp, absolutely. Save a ton of money. Just please make sure you do it properly. All right. Because I can assure you, having been through these audits, if Uncle Sam shows up and says, 57,000, Mr. Landscaper, where'd you come up with that? And you provide the report. I mean, RC Reports has 100 million data points. The IRS doesn't have I know for a fact because I've talked to the chief of audit. They don't have that kind of data. You hand that report over, you know what the auditor is going to do? They're going to flip through it, and then they're going to say, "Can I have a copy of this for my file?" Sure, that's your copy. Have at it. That's going to be the end of the issue, at least the reasonable comp issue, because the government does not have any better information than that. Okay. So, yes, if you have a tax pro and they haven't brought this to your attention, sit down with them. Honestly, if they haven't brought this to your attention, get a better tax pro. If you need a recommendation, I mean, we don't do returns, but contact me. I've got almost 600 tax rep members all over the country that I can assure you will provide better service than what you're getting. But sit with your tax pro, go through the analysis, run the report. All right. If you want that discount, you can contact us. Happy to give it to you. Right. I don't get paid. Whether you use it or not is, up to you. I'm just very hype on the company and I love their product. So anyway, yes, you can save a ton of money with an S Corp. That's how you do it. All right. Any questions? Comment below. Let me know what you think. And I hope all of you make a lot more money, save in taxes a lot more money legitimately, and put that money to work for yourself.